I can make the argument, and I have 235 years of history on my side. So a couple points. What we're up against, there are a lot of narratives. Wall Street loves narratives. Commentators love narratives. Narratives is just a fancy word for story. They want a story. And stories are very powerful. People buy into them and they act accordingly. But a lot of narratives are false. They're completely wrong. So then what's the narrative today? The narrative is, and this has been true for 50 years, free trade is good. Everybody wins from free trade. If the other guy puts on tariffs, too bad for him, but you still benefit from no tariffs. We get cheaper goods. Comparative advantage, going back to David Ricardo, I think he published his work in 1819 or thereabouts. Free trade is good and tariffs are bad. And as applied in the current context, tariffs are inflationary because they raise prices, yes, etc. So that's what you hear from everyone from Larry Summers to talking heads on CNBC, etc. It's all wrong. Let me explain why. First of all, as far as tariffs being inflationary, it's just not true, because everyone said, well, if you put tariffs on imported goods, they're going to raise the price to the consumer. No. There are three principal parties in the supply chain. It could be 20, but three conceptually. There's the exporter, let's say the Chinese manufacturer. There's the importer who receives the goods at the Port of Los Angeles or Port of Houston. And then there's a consumer who buys the goods. So you have these three people in the chain. Now, who writes the check? The importer, in my example, the Port of Los Angeles, you receive the goods. You got to write the check to the Treasury for the tariff. So you're the one paying it in the first instance. But who bears the economic cost? Because that can be pushed up or down the supply chain. I can tell you who's not going to pay it is the consumer. The consumer is tapped out. This came out on your panel yesterday. Consumers tapped out. Auto loans are going up. Mortgage equity is disappearing. Student loan debt is, you got to pay it instead of ignoring it. So that's going to be a weight on the consumer. Unemployment's going up, et cetera. There are a whole lot of kind of macro elements that go in there. But the bottom line is the consumer is not going to pay. If you put it on the consumer, they're just not going to buy your stuff, or they'll find something else that's cheaper, or substitute, or as I said, they'll find some other goods. They're just not buy it. So, and by the way, if Walmart and Costco and Target could raise prices, why wouldn't they? They don't need tariffs. It was the fact that they're not raising prices means they can't, tariffs or no tariffs. So now we're back to the importer and the exporter. And in reality, there's a lot of research that backs this up. They split it between them. Now, the importer can turn around to the exporter, the Chinese manufacturer, and say, hey, it's on you. You bear the cost of the tariffs. Lower your inputs, lower your costs, or reduce your profits, reduce your margins, do something. I wrote the check, but I'm not paying it. I want cheaper prices from you if I have to pay more. The point is, it's not inflationary because the consumer doesn't pay it. It is shared on some basis between the importer and the exporter. It could be lower profit margins. It could be lower stock prices, but it's not inflationary. In fact, quite the opposite. So that's number one. Number two, the U.S. did not have an income tax until 1913. How the heck did we pay for the War of 1812, the Civil War, the Mexican-American War, the Spanish-American War, invent the telephone, telegraph, railroads, transcontinental railroads, harvesters, industry, Henry Ford? How did we do all that with no income tax? The answer is tariffs. That's how we ran the country. That's how we paid for everything. So what Trump is doing, and just give you one more quick example. There's no such thing as free trade. People talk about it. They teach it in schools. I was a pretty good student in college, but I struggled a little bit in economics. And I was like, I got an A's and everything else. What's up with economics? But it took me...
That's news to me, by the way. But
well,
okay.
it wasn't until really decades later that I realized that everything they were teaching me was wrong. Like everything I learned in economics was wrong. And so that's why it never quite made sense to me. I figured that out later. But this idea of free trade, it's based on the notion that, England has woolens and textiles. Portugal has grapes and wine. Doesn't make sense to grow grapes in England. Why don't we trade textiles for wine and everybody's better off because we're all doing the thing that we do best? That's the theory of comparative advantage. It's nonsense. And Ricardo said this himself, and here's why. The inputs, the factors of production are mobile. So let's go back to 1975. What was Taiwan's comparative advantage in semiconductors? Zero. None. They had a comparative advantage in tuna fishing and rice farming, okay? But today, they're the largest, most powerful, most advanced semiconductor manufacturer in the world. How did they do that? They just did it. They made it a government policy. They put the government behind it. They attracted talent from California. They attracted capital from around the world. They had a very liberal policy. Like if you worked for Taiwan Semiconductor in the 80s, or 90s and you want to start your own business, they would say, do it, and we'll give you seed capital. As they created a whole ecosystem. But my point is, they did it out of thin air. So comparative advantages is nonsense because you can create it and the factors are mobile. So the question is, if you want economic growth, what do you need to do to get that economic growth, get that investment, et cetera? It's not free trade, it's tariffs. Because what Trump has said, he said the word, hey, you can sell anything you want to Americans, anything you want, free of tariffs, but make it in the United States. And that's really the point.
You brought up a good point yesterday, because I know you're close with Steve Bannon. You obviously do his show. Yeah. You're very close with the Trump administration. And you mentioned how it seems like there's total chaos.
Right.
But that's really maybe part of the plan, part of the presentation they want to give. Tell me a little bit more about what you think is happening there, because you say it's actually going to be a perfect Jenga piece that fits all together.
Right.
But a lot of, to the outside world, it just looks like chaos. They don't know what they're doing. They're changing their mind. Tariffs here one day, tariffs there one day. What's really the inner working?
Okay, well, first of all, your description is correct, Danielle, but don't underestimate the extent to which the media hates Trump. There is Trump derangement syndrome, which I think in the future psychologists will diagnose it as a mental illness and seems to be contagious. So, but if you're relying on the New York Times, the Washington Post, CNBC, Bloomberg News, et cetera, you're getting a false narrative.
For sure.
So what did we hear the entire month of February, right after the Trump administration got up and running? It was uncertainty. It was so much uncertainty about what the president's going to do and how can you make investment decisions, et cetera. And then if you read like The Economist or the Financial Times, et cetera, I mean, I will confess I read all these papers, but even though they put out a lot of junk, but it was chaos. So Trump says 500% tariffs on China. Well, it's like 100%, and then it's back up to 150. Now it's down to 50, et cetera. So it seems chaotic. No, they have very specific goals in mind. They have a very specific, highly detailed plan. They weren't working on it for 4 months. They were working on it for 4 years. The Trump team knew in 2020 that they were going to win in 2024 because they knew that the Democrats had cheated in the 2020 election. So they said, we really don't have to do much differently. We just have to stop the cheating, which they did, thanks to Harmeet Dillon and some others. So therefore, they had 4 years to work on these plans because they knew they were going to win. And they did. So these are highly refined plans. So what does it include? Well, I mentioned tariffs. By the way, tariffs are a major revenue raiser. So one of the narratives you hear is, Trump said he was going to cut the deficit, but deficits are getting bigger than ever. Where does that come from? It comes from the Congressional Budget Office. The Congressional Budget Office has never been right. They've never been close to right. Look at 10 years of CBO projections and show me one that's even close to playing out. And they don't. They're not stupid, but they have badly flawed models where they say, okay, here's behavior. Here's the change in the law. Let's apply the change to this behavior and see what it's going to cost. But they never consider the fact that the behavior changes. I was on the executive committee of an investment bank once, and we got to bonus season. This was during the Reagan administration. They were going to lower the taxes a lot as of January 1st. We usually paid our bonuses in February or late February after we closed the books. But we said, well, if taxes are going down, the taxes were going up. We moved the bonus payment to the last week of December because the taxes were lower, which made sense. But my point is, it's a very simple example of adaptive behavior. CBO does not take that into account. By the way, we just talked about tariffs. These will raise tens or hundreds of billions of dollars. The CBO does not count tariffs in the revenues. So say, your model's wrong. You don't assume change behavior, which is behavior always changes, highly adaptive, and you're not counting tariffs. So those projections are garbage, but they're on the front page of the New York Times.